Hi, everyone. Thank you for joining us today for our Business Reboot webinar part 2 with Lori Allen. This week, we'll be going over pricing and financials and all that fun stuff. Lots of fun accounting questions, I'm sure. We would love for you to introduce yourself in the chat. Let us know where you're coming from, maybe what industry you're in, and if you'd like to share a link to your business, we would love to know more about you. You can enter questions in the chat as we go or save them for the end. I'm sure we'll have some time set aside for that. Otherwise, I think we'll go ahead and get started, and I'll pass it over to Lori.
All right, well, thank you again. For those of you who joined us last week, thanks again for spending your lunchtime with us. I'd also be curious, excuse me, for those of you who were with us last week, and if you did anything that we talked about regarding your marketing focus. So if there's anything you want to share with folks that you found helpful that we talked about last week that you put into practice already, I'd love to see that. So today we are going to talk about pricing and financials. And, you know, most of us don't go into business because we love numbers. We start businesses because we find something we love or we do really well or we have a lot of experience in, and not necessarily that we have an accounting background or really know the financial side of businesses. The challenge is, though, is that the financial side of things really ultimately is what tells us whether or not we have a profitable business or successful business. And so it really is important to understand, you know, the fundamental concepts and be able to be at least somewhat knowledgeable and articulate about these things as we go along. I'm just going to check is there anything in the chat? Okay. Hey, Kelsey.
Yeah.
Do you see it? Is there anything in the chat or just
not seeing anything in the chat? So let's get at least some introductions, people. Come on. Yeah. What is it? Cloudy in your neighborhood too?
Well, actually, yeah, it is here in Auburn anyway. So I'm going to keep push forward, but definitely, you know, interact. One of the, I miss doing these workshops in person because people learn just as much from each other as they learn from me. And that's, I think doing it on Zoom that's one of the things we kind of lose, is that interactive approach kind of thing. So someone's brave. Yep. Oh, that was Kelsey. All right. All right.
I'll take the brave.
I'm going to move forward. I'm also going to turn my video off just to make sure. Sometimes we have some glitches if I run the video while I'm doing the PowerPoint. So I'm going to turn my video off now, but I'll jump back on. I did, as last week, I scheduled an intermission about halfway through the presentation for questions, and then we'll finish up and have another round of questions. All right, so as I said, there are some really, oh, I know what I wanted to say. I have my notes in front of me, I promise. As with last week, we do often have a mix of startup and existing business owners. So we're going to start with some really basic concepts and then move forward and build on those and build on those and build on those, and then ultimately have some action steps that we want to take. And it's already glitching. Hang on. There we go. So one of the most important things, whether you are starting out or maybe you've been in business a little while and you are realizing you need some help, there's some very fundamental things that I think every business owner really needs to know. One is just to have a basic understanding of accounting concepts. You don't need to be an expert. You don't need to be a CPA, but you do need to understand some basic accounting principles. And there's tons of ways to do this. There's literally, you know, you can read a book. There's Accounting for Dummies, for example. The SBDC, we do periodic workshops. SCORE is also a great place to do. They do a lot of workshops right now on basic stuff. And it just, it's really important that you just understand the basic concepts and how the fundamentals of your business financials actually work. You also need to have a bookkeeping system preferably electronic, something like QuickBooks. There's other products out there on the market, but you really do want to have a system for bookkeeping. Another really important thing is to schedule a regular review. And we're going to talk about what that review looks like. You want to be doing this at least annually. Frankly, I think you should be doing it monthly. And for some of you who maybe you're in a seasonal business where you're open Memorial Day to Columbus Day, you may need to do this weekly because 1 or 2 bad weeks means a bad summer. So regular review is really critical. It's how you pinpoint problems before they get bigger. Another thing you need to figure out is who's going to do your bookkeeping tasks. Chances are it's probably you, but maybe you're going to be hiring a bookkeeper and making sure that you and the bookkeeper are on the same page about how the relationship's going to go, what this means, what kind of reports that you may need to get to the bookkeeper, or what kind of reports the bookkeeper needs to get to you or get to your CPA. I encourage everyone to at least have a conversation with a CPA and about your taxes. This is something that can get really complicated really quickly depending on the type of your business. So it's really good to bring in that expert help. And then another thing you may want to consider doing is looking into payroll services. Payroll services not only make sure your employees get paid, but they also pay your income taxes and make sure you're square with all that stuff. So you have to worry about having money in the bank, obviously, but you don't have to worry about making those payments. And it becomes much more smooth, and you don't have to worry about a lot of stuff. So those are just some of the really fundamental basic things that I think every business owner needs to at least know and think about and consider. There we go. I also want to talk about this notion of good idea versus a profitable business model. I think we have this sort of cultural myth out there that all you need to have a profitable business is a good idea. And, you know, pre-COVID, I'd have one person a day in my office pitching an idea and asking me if I thought it was a good idea or not. And the reality is that, you know, you can go to any big box store or spend 5 minutes shopping on the internet, and there are a lot of bad ideas out there. As a parent, I think most of them are targeted towards children, and half of them find their way into my home. But they're terrible ideas, but they have a good business model. They're a profitable business model. People are making money off this stuff. And if you don't know what I'm talking about, if hopefully you've watched Shark Tank. I know some people have opinions about Shark Tank. If you haven't watched Shark Tank, I would encourage you to watch a few episodes. And if you have, I don't know if this has happened to you, but every once in a while I'll be watching Shark Tank and somebody will come out and they'll start pitching their product, and I'll get really excited because I just think this is the perfect idea. Like, it's an awesome idea. Why didn't I think of that? Or maybe occasionally I have thought of that idea, but obviously never took it anywhere. But the sharks will start asking questions, and you know, they may ask a question or two about their idea, how they came up with their idea or whatever, but then they start asking tougher questions about their costs, about their pricing, about their volume, about their marketing, about their manufacturing. And you begin to get a sinking feeling in your stomach that even though the idea for this product is amazing, these folks aren't going to get a deal. And they're not going to get a deal, not because they have a bad idea, but it's because they don't have a profitable business model. And so this is why the financial piece of it comes into play. And this is why when you come see an SBDC advisor, one of the things we're going to really focus in on really quickly is your financial projections and whether this is really going to be a viable business worth putting your time and money into. And it's also true that a lot of folks will start a business without doing this. It happens. And you get 6 months, a year into it and you realize, oh, I should have done more homework than I actually did. That's okay. It happens. It happens. But we want to start now and getting a really tight system in place and a tight model in place so that as we go forward, especially after 2020, that we have some really, again, it goes back to that building the foundation piece that I talked about last week. We want to make sure that you have a strong foundation to move forward. So this is really a very simplistic, basic business model. And there's 4 components to it. One is products or services. These are just simply the things that you're selling. The second part of it is cost. What is it actually costing you to produce these goods or services? And a lot of times people underestimate what those costs are going to be. So you want to make sure that you've got a really good handle on what those costs are and how to keep those costs under control. The third part is price. And we're going to spend a little bit of time today talking about pricing specifically, because it's a really hard topic for a lot of folks to get their arms around. And then finally, volume. How many of something can you actually produce and sell? And so what happens is when you're creating a business or trying to build your business, these 4 components all relate to each other and have a role to play. So for example, as you maybe your costs go up to produce your goods or services, that may mean your price has to go up. Or that may mean your volume has to go up because you have to produce more to actually achieve the revenue that you want to produce. So think of them as sort of levers, and as you adjust the levers, different things happen along the way. So I'll give you an example from my own life. One of my favorite things to do when I'm not at work is to quilt. I love to make quilts, and I love to make baby quilts. And every time I make somebody a baby quilt, they inevitably say, you should sell these. You should totally start a business and sell these. And I wish I could, but when I do the math, it gets a little hard. I like to buy really nice fabric, and so it costs me about $60 to make a baby quilt. And it takes me about 10 hours to sew these things. So just that alone, my materials and labor, not accounting for any other expenses like having some insurance or keeping my sewing machine running, or maybe I need to buy a new chair, whatever, I at least have to charge $210 to sell these quilts. And, they're not that nice, right? Nobody's going to spend $200 on a quilt that I make. They're just not. They're little tiny baby quilts, right? So if I was really serious about making this into a business, I'd have some really hard decisions to make. Maybe I could get my materials wholesale costs, and that would lower my costs of materials. Maybe I could find a way to speed up the amount of time it takes me to make these quilts, and therefore, I wouldn't have to, maybe the cost for labor would be lower. So I might be able to get this down, but you go to a craft show and you see things, most of the times I'll see a baby quilt selling for $25, $50, maybe $60 tops. If I was to just do my market research and say, okay, I can charge $60 for these quilts and start selling them, you can see I just barely cover my material costs. I wouldn't be covering all my costs. I wouldn't be able to cover my, pay myself for my work. So this is kind of the trap that a lot of times we find ourselves in, that when we don't really understand how those levers and how our models work, we wind up starting businesses that, yeah, great idea. People love my baby quilts, but is it a good idea to start a business sewing them? Not for me. So this is why the pricing, you can see why pricing becomes such an important piece of your financial model. And it's an interesting concept because it sort of straddles the marketing realm and the financial realm. And we talked a little bit about that last week. Because your pricing, it helps determine your revenue. And at the same time, it helps determine your market, your place in the market. So whether you have a low end good price or a higher end good price, that determines your target market and who your target customer is. but again, it also impacts your financials. And so it's really that nexus of marketing and financials. It is really challenging though, and it's one of the things that I find, as an advisor, it's really difficult to have these conversations with, because pricing, for lack of a better word, it's squishy, and not in the like cute baby cheeks squishy. It's squishy in the sense that it's hard to get your arms around it. And while there's no one right way to do pricing, there's lots of wrong ways to do pricing. And so we really have to look at pricing from a couple of different angles to figure out where you need to be and what makes the most sense. And honestly, whether it makes sense giving your pricing to either start or continue your business. So there's 3 different ways that we like to look at pricing. And the first, we're going to take each of these in turn. One is bottom up, whereas we do exactly what I just did with my little quilt business, which is, what do I need to charge to cover my expenses, pay myself some money, and make some profit? Another approach is top down. What are my target customers willing to pay? And how does this relate to my overall value proposition? And then the third way to think about pricing is competition. What are my competitors charging? I'm going to talk about each of these individually. Bottom-up considerations, we just did that when I talked about my quilt business example. I determined my cost of goods sold. I estimated what I needed to pay myself, my expenses. Now, I also really want to talk about a concept. There's fixed costs versus variable costs. And hopefully you guys know the difference, but I'm just going to spend a minute talking about this. Fixed costs are those costs that you have to pay regardless of whether you make 1 sale or 1,000 sales. And the most obvious example is if you are leasing a space, you have to pay rent every month, and it's, for example, it might be $2,000 a month, and you have to pay that $2,000 a month whether you have 5 customers, 500 customers, 5,000 customers. It's a fixed cost. Variable costs are related to your sales. So maybe you've started a business selling picnic tables, and you get an order in for 5 picnic tables. So you go to the hardware store and buy 5 picnic tables worth of lumber. Okay, that's a variable cost. Your material costs are variable. And you'll figure out from that what your cost of goods sold are. And then you need to figure out, okay, so how many of these things, how many quilts, how many picnic tables, how many whatevers do you need to sell in order to cover your expenses and pay yourself? And then the second question is this reasonable? Is it achievable? Because if it's just you're limited, right? There's only so much you can do in 1 8 or 10 hour day. There's only so many picnic tables you can make, only so many quilts I can make. And if I can't pay my expenses, if I need to make 20 or 30 a day in order to meet my goals and pay myself, that's not reasonable. It's not achievable. So this is how we kind of think about making sure that from a bottom-up perspective, that your bases are covered, you've covered your expenses. And if you're not covering your expenses, you need to either figure out a way to decrease your expenses or set your pricing in such a way that you can cover your expenses. The second way is called top-down pricing. And this is where you're looking at your target market and kind of looking at, what's the perceived value and what's the customer demand. And the best way, I think, to explain this is to give you an example. So, the holidays are coming up. My daughter is obsessed with Christmas decorations. And so we've been, looking at Christmas decorations and how are we going to decorate the house. And so she thought we should get some new Christmas pillows. And so you can look here, Walmart. You can go to Walmart and get a holiday deer pillow, $10.44. Now, I don't know this, but I can assume, Walmart, this is a mass-produced pillow. It's probably being made overseas, and there's probably hundreds of thousands of these pillows made every year, and you can get them very inexpensively, and it's a very clear target market, right? On the other hand, on the other extreme, there's a company here in Maine, Maine-based, Maine-owned, Erin Flett, she hand prints her items, screen prints her items. She employs main people. It's very much about her brand, and it's very high end. This pillow retails for $145. So totally different market. Now, for her to make a profit, for Walmart to make a profit off these pillows, they have to sell a lot of these pillows, and they're priced accordingly. And the materials are, their costs are priced accordingly. This other business, the higher end business, they have a whole different business model. And what I want to make clear is neither one of these models is right or wrong, but you need to figure out where your business is and where your pricing fits into your target market, because the folks who are buying these $145 pillows from Erin Flett are probably not buying pillows from Walmart as well, and vice versa. So that's the top-down approach, where you're looking at, okay, what's my target market and what are they looking for and what are they willing to pay for my goods and services. The third way of looking at pricing is what we call competitive pricing. And this is what I see a lot of. I have a lot of folks who come in and say, I'm going to charge $50 for my services because that's what the guy down the street's charging. I know I can make this money, and this guy's making a lot of money charging these, so therefore I can. The problem with that, in the value in doing that is you can see what the market is out there for your goods and services. You can compare prices, and thankfully the internet is such now that you can find out a lot online about your competition and what they're charging and what they're offering for services and products. The downside is that you don't have access to your competitors' inside workings of their business. So you might have, say you're a mechanic and you want to start your own garage, and you know that there's another local mechanic and he charges $50 an hour for labor. And so you decide, okay, well, that's what he charges, so that's what I'm going to charge. He's doing well, so I might as well, I'll do well too. But you get into it, 9 months, a year down the road, and you're looking at your financials, and you realize that even though you're busy, and even though you're charging just as much as the guy down the street's charging, you're not making any money. And the question is why? And so it might be that this guy, he inherited his land in his garage from a family member, so he doesn't have any rent or mortgage expenses, whereas you're leasing a space and spending $2,000 a month on it. So that means that your pricing, even though it fits within the market, it doesn't cover your expenses. So it can be very informative, but it can also be dangerous to just simply look at your pricing from the competitor's point of view. You really want to take into consideration all these pieces and figure out a way to hit your price points accurately within the marketplace, as well as accurately in terms of meeting your expenses and paying yourself. Another piece of where competitive pricing is important, though, is because it's going to give you an estimate, and you can kind of think about, okay, well, what's going to allow me to charge less versus what's going to allow me to charge more. So maybe your competitor has been in business for 40 years and they have a really established brand and reputation, and you're just starting out. And maybe your costs are lower than your competitors, so therefore your prices can be a little bit lower than your competitors. Alternatively, maybe there are some reasons why you can charge more. Maybe you are adding value to your product or service in a way that your competitors don't. Maybe you're the one with the 30 or 40 years of expertise that lend yourself to being, a thought leader or the leader in the marketplace. So there may be reasons why you can charge more. There may be reasons why you can charge less. But I just caution you that don't rely on your pricing just based on your competition. For those of you who have service businesses, it's similar. I think what's hard about service businesses is that you often have to make some decisions about how you come up with your pricing, because there's an hourly rate. You could charge a flat fee for a project or a service. And then there's also bid pricing, where you're actually putting bids in on projects, or doing, you know, requests for proposals and things like that. And it really, a lot of times, you just have to look within your industry to see what is, you know, the standard, and kind of figure out what makes sense for you. I used to have a side business where I was doing grant writing, and I learned very quickly that for some of the smaller grants, charging an hourly rate was fine. You know, I charged $30 an hour, and I could get a very simple grant proposal out, you know, small 3, 4, 5 page. It'd take me a couple hours, and it was no big deal. Federal grant proposals, I don't know if any of you have ever written or worked on a federal grant proposal, but they can take weeks, if not a couple of months, to put together. Some of them are incredibly complicated and require enormous amounts of data and logic models, and they're a beast. And I actually lost my shirt one time because I charged a flat rate for a federal grant that I was working on, and it took me hours and hours and hours more than I initially anticipated. So, and sometimes you may come up with a project where you'll start out with a flat fee for a project, and then if it takes more than so many hours, then you're going to charge an hourly rate. There's different ways to do it. So like I said, this is where pricing can get really squishy and really hard to get your arms around. And frankly, sometimes it does take some trial and error. Sometimes you have to learn the hard way, like I did with that federal grant. You gotta go through it once to learn. I will say that it's always easier to lower your prices than it is to raise them. So if you start out at a higher price point and find you need to lower your prices, that's going to be easier on your customers than the opposite. And unfortunately, what I see is a lot of times people will price their stuff too low because they feel like they have to. Oh, I'm new to the market, or you know, I don't have a ton of experience, so I have to start out lower. And it's just harder than to raise your prices as you go on, because your customers are like, wait, why are you now charging me twice as much as you were? So you got to be really careful with pricing. Some common pricing pitfalls: not charging enough. A lot of folks forget when they're doing their projections to include paying themselves. Now, it's true, like particularly in the first year or two in your business, you may consciously decide, you know what, I'm not going to take a salary, I'm not going to take a draw, I'm going to put all of the profits back into the business. And that's okay, but if you haven't built in paying yourself already, when you do want to take a salary out, there's not going to be any money to do that. So you want to make sure that you build that money into your projections. And the other thing is even if you're not paying yourself, you're still going to have to pay somebody else to do it. So, and again, if you don't build those costs in at the beginning, you're not going to be able to take the money out. It's not going to be there. Third pricing pitfall I've also discussed, you know, setting the prices just based on the market and not your costs, because that's a really easy way to all of a sudden, you know, have a really significant loss. And then fourth, the fear of raising your prices. Sometimes, and this may be one of those years where you guys have already had to face this, where you may have to raise your prices. The cost of goods has gone up. Maybe you've had to switch suppliers, you're paying more, and you maybe the only way you can survive is to raise your prices. And that just may be reality this year. So you want to do it thoughtfully, and you want to do it, make it as easy on your customers as you can, but you may need to do it. Okay. So let's pause right here and see, do we have any questions? Any questions on pricing before we move on to the financial side of things? Let's see, we've got, musician, private music teacher in Poland. Hi, Phyllis. Joel Ellis Brown, photographer in Portland. Got a travel agency, holiday rental in Sandy Point, restaurant. Lloyd Herrick from Paris. Here, okay. So we've got quite an interesting mix of folks on here today. Any questions about pricing? Anybody find pricing challenging? This year in particular, anybody had to make any hard decisions about pricing? Just giving folks a minute to type, but I'm not seeing any messages, so. Okay, all right. No questions on pricing, going once, going twice. Okay, I'm gonna move back then and go back to sharing the screen and we'll move on. If you do have questions, we'll have another question and answer period at the end here. Let me go back to sharing my screen. Share. So now we're going to turn to the actual financial review. And again, this is something you should be reviewing your financials on a regular basis, at least monthly. But I think at the end of the year, it's a good time to just take stock and figure out, where you've been and where you're going. So one of the first things I'd like you to do is create a financial vision for the future. And this is just an example I came up with, and it's sort of like, you know how like if you watch Law and Order, I'm talking about TV a lot today for some reason, but Law and Order, any resemblance to any like real situation is completely coincidental. Like I really did make this up. So if you own a bakery somewhere that makes donuts, you're not my client and this is made up. So this is just an example of how you might articulate your vision, your financial vision for the future. So in this example, it's been 5 years since I started my bakery business. We're known locally for our homemade donuts. We have 1 retail location in a busy downtown district and wholesale accounts with 3 independent markets in our region. Our staff has grown to 3 full-time and 2 part-time employees. Most of our clients are local, but during the summer we see increased tourism traffic. Our annual revenues are approximately $500,000. Our goal is to expand to another brick and mortar location, as well as expand our wholesale accounts by 10% and expand the staff by another 2 employees. That's this particular scenario. And what I like about this is you have a very clear sense of where they've been, where they are right now, and where they want to go. Now, is this achievable? We'll see. That's part of the reason why we're going to start looking at the financials. But I really want you to take the time to sort of sketch this out for your own business. And for those of you who are a startup, where do you want to be this time next year? What is your ultimate goal? Somebody mentioned they wanted to start a pet sitting business. So by this time next year, how many clients do you want to have? What does your revenue look like? Because if you can visualize it, you can create a roadmap to get there. And it's like, we can plot a map to anywhere, but if you don't know where you're going, we can't plot a map. So this is really the guideposts and signposts that you're going to say and your targets that you want to achieve. Now, I will say also that this year, your goal may be for 2021 to be where you were in 2019. This year has been so crazy for existing businesses that maybe it is just, this is our year to rebuild and get back to where we were after 2020. And this year, that is perfectly okay. But you want to be clear about what your vision is and how, and then we're going to plot a course to get there. So the next thing I want you to do, and again, if you're an existing business owner, hopefully you are set up in QuickBooks and you can, or your bookkeeper can pull these reports pretty easily, but you want to look at your profit and loss statements, you want to look at your cash flow statement, and you want to look at your balance sheets. So pull those out. ask your bookkeeper to pull them for you, and really take a look at them. And hopefully you can pull them in a sense that you can look, from year to year and then month to month, because that's going to be really helpful in helping to tell the financial story of your business. Now, if you're a startup, this is where you're going to do projections, and some of this you're going to have to guess a little bit about, but you want to make sure that those guesses are as realistic as possible. So you're going to put together an income statement, which is similar to a profit and loss statement, where it's going to track, this is what we think we're going to bring in each month, and this is what I think my expenses are going to be. And you're going to plot that out over the next year. And I meant to plug this earlier, but for those of you who really want to dive in and do projections for 2021, my colleague Rainer is doing another series, I believe in December, and actually working with you to get a set of projections for 2021. So I'd encourage you to sign up for that session as well. So first step, get all this information together. For those of you who don't use an electronic accounting system, you're going to want to pull your ledger books out, and it is a little hard to do this, but I've worked with a couple clients recently who use the Dome ledger books, and you can just use the last page of the month and capture those, they're running totals, but you set it up, you can do like a spreadsheet in Excel and just kind of enter that information in and kind of subtract it out. It's a little tedious, but it can be done because I did it. And, I can help you do it if you need some help doing it. But you want to be able to plot it out so that you can see the trends over time. Another thing, a couple things that may be helpful for you as you do this review and analysis is to pull your bank statements. Hopefully you have, even if you're a sole proprietor, you have a separate bank account for your business banking. Because if you are combining your business and personal, it's going to be really, really hard to pull out. You're going to have a receipt from Walmart with 20 different things on it, and which was your business and what was your personal expenses. And unless you're really, really on top of things, it's going to be really hard to sort that out. So hopefully you've separated it. And if you're running an LLC or a corporation, you have to separate them. So on some of you, your to-do list may be go get a business banking account. But pull out your bank statements, and then tax returns from, if you're an existing business owner, your past few years of tax returns. Those will also help tell your story. Now, what commonly happens for folks is when I talk to them about how they're doing year to year, is they immediately go to their bottom line and they say, well, 2 years ago, I made $50,000 and last year I only made 30, and I have no idea what happened. I guess, next year I'm just going to have to work harder. And I actually see that a lot. A lot of times people think if they have a loss from one year to the next, that they just have to work harder, that they didn't work hard enough. And I think that's, we Mainers, we have great work ethic. But this is one of those cases where it may not be working harder, it may be about working smarter. And so really diving in and figuring out, okay, what happened? Why did I have $20,000 less this year than I did last year? And so what I think is helpful is to really look at a couple of different things. First, look at your gross revenues. So this is just literally the money that's coming through the door. And you want to look at it by year as well as by month. Now, hopefully, you've been looking at this all along by month, and so it won't be a surprise to you to see, like, for example, oh, February, we had a terrible February. Why did we have a terrible February? And you may think back and go, oh, right, that was, we had a storm every week last February, and, we have a retail store and we had to keep closing, and nobody was out shopping because we had, 3 feet of snow that the city hadn't plowed yet. So there may be real reasons why, 1 month was off, but maybe not. Maybe you're like, why was that month really off? I don't remember. Alternatively, maybe you need, hopefully, if you've got an electronic system where you can break out your revenue streams, you may be able to identify some trends either by month or by product line. So maybe you own a restaurant and you can see that, you know, your takeout is doing really, really well for obvious reasons this year, but maybe your dining in is not doing as well. Or maybe it's in another year, maybe it's just the opposite. And it's going to help you see, well, okay, this isn't working so well. Does this mean that I need to drop that service or that product? Or maybe I need to tinker with it and change it? Or why else is this not working? Maybe you introduce a new product line that's not doing well, or maybe for whatever reason you had low inventory and that's affecting your sales. You also want to look at, you know, did I spend more or less on marketing and advertising this year? Maybe my sales are down because I didn't do any advertising, and maybe my goal for next year means, you know, I'm going to have to spend some time and energy on doing a marketing campaign or an advertising campaign. It may also help you point out that you have a staffing issue. So for example, if you see that your sales revenue is down, well, and you've ruled out any other problems, maybe you have a staff training issue. You know, maybe you have a sales manager that you know really wasn't doing the best job, and you've just been putting off making a hard decision about letting that person go, or, you know, finding somebody else. Maybe there's something else going on. Maybe your revenue's down because you have an employee skimming off the top. I met this woman at a conference. This was several years ago in another state. She ran a restaurant bar, and her profits were way down. She could not figure out why her revenues were so off, and she wound up, you know, her CPA. They went through everything, and they finally discovered that what had happened was they had an employee who was stealing liquor. They had a bar and a restaurant, and the employee was stealing liquor. And it had been going on for almost a year before she caught it, because she just hadn't looked at it. And, you know, the demand was there because the liquor was disappearing, but the sales weren't there. And so by looking at these, you know, just even what's coming in the door, if it's not adding up, or if you're seeing losses that don't make sense, it may trip you off into realizing, okay, maybe there's a staffing problem that I need to address here. The other thing you want to look at is your expenses. And again, you're going to do this by year, by month, and then by line item if you have to really drill down and figure out what's going on. So maybe, did you have any unexpected expenses? So maybe, oh yeah, we had a leaky roof, and even though we have insurance, we had a $5,000 insurance deductible. So I know that was a one-time expense, and it's not going to happen next year, knock on wood. Another thing that might come up is anticipated expenses that hit in a way that you didn't expect. So for example, one really common thing is rent increases. Like if you have a lease, it's very common that every year your lease will go up by a certain percentage. And even though you know that, and you know you've been paying it all along, you might not have realized what that's going to do to your bottom line and your profit margins. So that's another thing to take a look at. And in that case, you're like, oh, okay, my rent costs are going up. So are there other things that I can adjust, or is this a situation where I really do need to raise my prices or do something different to offset that increased rent expense? Another thing that can happen sometimes is that you wind up paying more for things than you realize. Like you may have a bunch of suppliers and you might not have noticed that they had to increase their prices. And so you thought you were spending $20 for something, and now you're spending 40 or 30, and incrementally, you don't realize how it adds up. And then at the end of the year, you realize, holy cow, I spent a lot of money on cups. I need to find another place to buy my cups from. And then you need to also kind of think about, okay, well, am I over ordering supplies? Am I over ordering inventory? Who's responsible for ordering supplies and inventory? You may have a very well-meaning employee who's doing ordering and think they're doing a great job because they're keeping up and they're never running out of anything, but really they're over ordering and you've got a huge box of something in the back closet that you're never, it's going to take you 3 years to blow through those cups. So again, that's why it's really important to look really deep and really hard into these things, because you're going to find if there are problems, they're going to show up in the numbers. They really will. The last thing you also want to look at are your taxes. And I just want to say, I am not a CPA, and taxes is something like, it's not my strength. It's not my forte. So this is something you definitely want to talk to your CPA about. But you want to make sure that what you're doing with your taxes matches your goals of your business. So for example, a lot of times when we're doing our taxes for our businesses, we want to minimize the amount of taxes we pay. And so we're trying to maximize our deductions. But that may not be the right strategy for your business goals. So for example, if my business goal is to sell my business in the next couple of years, I may not want to maximize or minimize the taxes I'm paying. I may want to maximize my revenue so that when I go to sell my business, somebody can see my books and see how much money I've been able to make. And there may be other considerations to play. Maybe you're looking for financing and you want to make sure that your taxes and your books look really strong so that when you go to the bank, they can see how strong you are. So make sure that whatever your business goals are, that you've had that conversation with your CPA, so that when you're doing your taxes, that those taxes are going to reflect your business goals. So after you've taken all this into account, you've got all this information at your disposal, and maybe you've uncovered some things, you've got some other stuff to consider. Are there any opportunities to cut your costs? And I know a lot of you have had to do this year. You've had to really pour over things and cut back and make some hard choices. And there may be more hard choices to make as we go forward. Are there other opportunities to raise revenue? And of course, there's increased pricing and increasing your volume if that's possible. But there also may be opportunities to add products or subtract products. A lot of folks have added PPE to their inventory. Everybody's selling masks nowadays. Everybody's selling hand sanitizer. There may be other opportunities out there in the marketplace for stuff like that. Simultaneously, there may be opportunities for additional sales channels like we talked about last week. Maybe this is the year that you need to invest in a website that you can sell stuff online, because we know everybody's online right now. Maybe it is expanding takeout, maybe it's expanding delivery. Anything you can do to offer additional sales channels to get your revenue up. And then finally, just in terms of getting really creative, are there any opportunities to partner with any other businesses? And I found a couple of examples. One here locally, Side by Each Brewing here in Auburn, they partnered with Norway Brewing in Norway to do a joint collaboration on a beer launch. And I thought that was a great creative example of two businesses who would normally be considered competitors coming together and doing a product launch that's going to benefit both of them. Thought that was a great idea. Simultaneously, there's the Main Street Maine program. For those of you who are in downtown districts, you probably know about this, but on their website, they have several examples of how businesses have come together to address the pandemic and all of its associated challenges and things like that. So maybe it is, if you own a restaurant, maybe it's partnering with another local restaurant to, if you sell pizza and they sell beer, maybe there's a way to combine that. I know also at Side by Side, Otto's Pizza's been doing, I think it's every Tuesday, Otto's Pizza, you can order online and pick it up at Side by Each. So there's a lot of interesting partnerships that have evolved because of the pandemic, and there may be opportunities for you and your business as well as we go through this to either partner with same businesses, similar businesses, or within in the industry. And the biggest thing that comes to mind is the wedding industry. Maybe it's a photographer and a caterer coming together to offer special deals on elopements or micro weddings, as they're called. there are opportunities out there. It's just, how creative can you be to think about them and find them? So a couple of things that I would encourage you to do today, just to start with. One is schedule time to do this financial review. Put it in your calendar. If you don't put it in your calendar, you'll never do it. And just won't happen. So put it in your calendar. Schedule a couple of days, couple of hours a day. I don't care how you schedule it, whatever makes sense for you, but put it in your calendar between now and the end of the year to pull this stuff together and do the analysis and see what it tells you. The second thing is, start gathering your data. Chances are it's probably in different places. Maybe you're lucky and you've got everything at your disposal and you just run a couple reports and you got it. But some of you, this might be a little bit more of a task. So start pulling the data, pulling the information. You might have to call your bookkeeper or accountant to get copies of stuff or have them run some reports, but just start the process. And then the third thing that you can do today is really start thinking about that financial vision for the future. That goes back to slide 13. And just start writing down some ideas and keywords and what are your goals for next year? Where do you want to be this time next year? And then also, like 3B, if you don't have a business bank account, start doing your research. Go open a business bank account and make sure that you are separating your personal and your business expenses, because I'm telling you, you will make your life way easier when you come to do all this stuff next year. So let me just stop share for a moment. Any questions? Let's see. You guys are such a quiet group. I wind up going through this so quickly with you all. Any questions? Thumbs up, thumbs down. One thumbs up from Kelsey. Okay. Is there anything that you wanted to talk about today or hope to talk about that I didn't talk about? Okay, good. Yeah, the goal setting examples, I can't stress enough. I really feel like having that vision and being able to work towards that vision and those goals is really critical. Okay, so just for fun, I don't know, I'm gonna go back to sharing my screen here for a minute. If anybody, where's share screen? Here we go. You wanna stick around for a minute. I never watched The Big Bang Theory when it was on, but somebody recently shared this with me. I thought it was hysterical. And I thought it was also a great example of sort of both starting and running a business. So I'm just gonna play this for you. Hopefully I've done this correctly. Kelsey, you tell me if it doesn't work.
Look, I started a business.
We can't see it. We are only seeing your PowerPoint. I think you've only shared
No, I'm making
access to PowerPoint.
Okay. I call them penny.
All right, well, sorry.
That's okay. If you unshare your screen and then choose the other web browser, I guess, whatever you have YouTube open in, then that should open.
I have share computer sound.
Yep, but it's the screen. So it looks like you chose the PowerPoint presentation specifically.
Oh, gotcha. So screen.
Share the screen.
Share the screen. You see it now?
There you go. Yeah.
All righty.
Blossoms. I made one for
Let
myself.
me back it up. Sorry.
Yeah, look. I started a business.
Obviously not a cleaning business.
No, I'm making flower barrettes. See? I call them penny blossoms. I made one for myself, and then all the girls at work wanted one. Then I showed some to this lady who runs a shop in Old Town. She sells cards and homemade jewelry. She said she wanted to sell them. I said, okay. And in 1 week, I made $156. So what do you think? I mean, this could be a business, right?
How many of these can you make a day?
About 20.
And how much profit do you make per penny blossom?
I don't know, like 50 cents, I'm not sure.
No, of course you're not. All right. $10 a day times 5 days a week times 52 weeks a year is $2,600
That's all?
before taxes.
Well, I don't have to pay taxes on this stuff.
I believe the Internal Revenue Service would strongly disagree. But if you took advantage of modern marketing techniques and you optimized your manufacturing process, you might be able to make this a viable business.
There, done.
All right, 12 minutes and 17 seconds.
Pretty good, right?
That's 4.9 penny blossoms per hour. Based on your cost of materials and your wholesale selling price, you'll effectively be paying yourself $5.19 a day.
A day?
There are children in a sneaker factory in Indonesia who out-earn you.
That just can't be right.
You're questioning my math?
No, sorry.
Would you like me to show my work?
Oh, God, no. Just please tell me what to do about it.
All right. Are you familiar with the development that resulted from Honoré Blanc's 1778 use of interchangeable parts? The assembly line, of course. I'll sing you a song.
Give me some time to blow the man down.
So my back, oh, here we go. So you can see how that goes, but I thought it was really funny because it just really lays out sort of the process and how we need to think about things as we set up our pricing and figuring out, what we're capable of producing and stuff like that. So you can watch more of that clip online. There's more there than that, but just a couple minutes of fun. So a couple questions here. When the vaccine comes and businesses can open up again, do you think that we should lower our prices because people have less money? Oh, I've seen folks struggle with that. And it's interesting because it depends, it goes back to your target market. And it also depends on the type of business, because one of the things that, there's research sort of coming out, and one of the things is that the pandemic has not really affected higher income brackets. So if your target market's in a higher income bracket, they probably have just as much money as they did before the pandemic because they haven't been influenced by that. It also depends on what kind of business you have. So for a while, as when the additional unemployment benefits kicked in, and when we got the stimulus, do they call them stimulus payments? Everybody got, like, I don't know if it was $1,500 or something like that, $1,200. You saw the economy start to rebound a little bit because people had money and they were using to buy, like groceries and stock up on things, and so that helped drive. And so part of it also depends on whether or not there's another stimulus package, and how that will impact, because people will have a little bit more money to spend. So it depends on whether you're selling, if you're a small market, markets have done really well this year, and even though they have had to raise their prices because things were harder to get, versus it really, again, it goes back to your target market and what you're trying to do. Some of us, you will have to rebuild your customer base. You're going to have to find a way to do that, and that might mean changing your product line, changing how you're doing things, going back to that whole people are shopping online now. If you do online shipping, I just want to tell you, be really careful about whether or not you build shipping into your pricing, because the shipping costs have dramatically gone up. And it can take a lot longer. If people want things, we've gotten to this Amazon Prime 2 days, it better be on my doorstep mentality. And if you're trying to compete with that, you want to make sure that you're charging the shipping on top of your product, because otherwise you're going to be having to absorb some pretty serious costs for shipping. So, any other questions, thoughts? So you will get a email from Kelsey sometime today with this presentation that you'll be able to print out.
Everyone just keep an eye out from our my follow-up email. It'll include the slides and a link to this recording if there was anything you wanted to circle back to.
Well, thank you. I appreciate that. Somebody said that they didn't have any questions because I did a good job. So I appreciate that, because I will tell you, as I said, I'm used to doing this in a room full of people that's very interactive, and it's really been a challenge for me to present this in a way, you know, that I know that makes sense in my head, but it, you know, it's hard to tell through Zoom whether it's landing. So Kelsey, somebody doesn't think they got the email for the first.
Yep, that's
one.
going out as soon as this webinar ends.
Okay.
So all of that video was updated, and actually, no, the first one you probably should have got, but I can make sure that both links are in this next email that I go out. So part 1 and part 2.
And I would also say check your spam folders, because every once in a while, especially if there's attachments, they will wind up in people's spam folders. And
Yeah,
so next week, we do this one more time with operations. And again, I would encourage you to check out the other classes that SBDC is offering right now. They're all free. And particularly the one I mentioned that Rainer's going to be doing on financial projections. If you're an existing business owner, I would really check you out. Rainer, that's really Rainer's forte, and he's going to dig in deep, and you're going to learn a ton of information.
And that information to register for that webinar will be in the email that I send out later.
All right, well, thank you all for being here, having your lunch with us, and we'll see you next week.